Hey everyone, my name's Andy. My channel is Finding Value. If you like making money in undervalued sectors, and we're talking lots of money here, subscribe to the channel, give me a thumbs up, leave any comments you guys have in the comment section, please. I'm going to talk about oil and a possible oil squeeze. And we're talking about a big oil squeeze. I'm going to go over some charts. I'm going to show you, update kind of what the ratios look like, what the price is doing, and what that chart is about to do. I'm going to show you some articles on what some other people think about a potential oil squeeze. And I'm going to show you some more graphs on how short everyone is on oil. Remember, this is a very good, I think, opportunity in oil. I'm super excited to share this with you guys because this is going to be big, I think. So here's the oil squeeze, and this is some data I'm going to show you and some articles. So oil squeeze, it says supply disruptions from COVID and the Texas freeze. We've got supply disruptions from those two events. Investments have declined substantially in oil over the COVID oil price going negative and remaining low from COVID. We've got decreased investment from large investment firms who are going green. So they're not willing to invest in oil, which is literally, we've got these investment deprived areas in oil. Commodity boom that's coming right around the corner, which means that we're going to have a mining boom that is incoming with increased demand for oil and gasoline. Inflation from real estate and money printing from the Fed Reserve is going to add fuel to this fire. And what I'm seeing here is an opportunity of a lifetime in oil. The ratio of gold to oil is still cheap for oil. It's around 25-ish barrels to 1 ounce of gold, and we'll look at that at the next slide, 26 to 25. This setup is a rare opportunity in someone's life, I think, because of COVID, the Texas freeze, and because of the money printing, because oil is very sensitive to inflation, and because of the commodity super cycle that's coming. It's all of this combined, which is absolutely insane to have this all aligned like this. So here's the ratio analysis. This is gold to oil ratio. And whenever it's over 30, whenever you're over 30, it is a screaming deal. Like it is, very rarely does it get above 30. And we had in March and April and May, we got all the way to 150. That is ridiculous. Then the oil companies really started to bottom in this summer to fall timeframe with the oil to gold ratio at about 50. I created this channel in September and was like, everyone, I'm huge on oil. You got to get in. And my channel just wasn't as big and I couldn't reach as many people. But I still think there's a huge opportunity here. We are still at 26.6. I think it's a little bit lower maybe today, but we're around 26, 25 barrels to 1 ounce of gold, which means that we are still extremely cheap on oil. And here is the price of oil. And the price of oil, I mean, we're getting up here quick, and we're about to break out of this large chart pattern. And I even have another, I'm not going to have another clips that I shared where the oil price, if you were to draw, you have a line that comes in contacts here and goes all the way up to like $200 or $300 a barrel. I think it's possible that we could get up to $200 or $300 a barrel when we break this, and it may take us 5 to 6 years to get there. Now, I've got some articles here that I was reading, and I was trying to get some other evidence of things that I was seeing here. It says, this is June 18th of 2020, this summer. It says $190 oil sounds crazy, but JP Morgan thinks it's possible even after the pandemic. And they're talking about, in a little noticed report, JP Morgan Chase warned in early March that the oil market could be on the cusp of a super cycle that sends Brent crude skyrocketing as high as $190 a barrel in 2025. Weeks later, the coronavirus pandemic set off an epic collapse in oil prices as demand imploded. And yet the bank is doubling down on its bullish bet. And they're seeing the same thing that I'm seeing. We're seeing weaker dollar, higher interest rates, which means it's inflationary. And we've got the real estate market. And they don't really talk about the real estate market. We have the real estate market that always lines up with the commodity super cycle going into an expansion phase of real estate. So we've got everything aligned. Looming deficit suggests prices will go through the roof. For years, the world has had more oil than it needs. That glut caused storage tanks to fill up to the point that crude turned negative in April. So oil producers slash supply, but now the pendulum in the boom to bust oil industry could swing too far in the opposite direction. Oversupplied oil markets will flip into a fundamental supply deficit beginning in 2022, according to JP Morgan report June 12th. BP sounds the alarm. Go down here. Oil spending could collapse to 15-year lows. Between 2015 and 2020, more than 50 new oil projects were sanctioned globally, according to JP Morgan, but the bank estimates just 5 so-called greenfield projects will come on the line in the next 5 years. So there's not much coming online. Supply has been decimated. We have underinvestment. They're not going to flood the market for that reason in terms of their budget, massive. But Saudi Arabia needs much higher oil prices to balance its massive budget, with a break even at about $80 a barrel. So they can't balance their budget. There's incentive for them to hold the prices at a much higher level than where it is today. We've got the climate change factor. It says shale's growing up. It's still there, but it's maturing. The combination of the price crash, capital flight, and climate change could limit the oil industry's ability to attract the necessary money just when it's needed the most. Now, I've got another article here. I wanted to touch on this as well. It says Wall Street's next short squeeze could be in energy stocks, and this was released February 16th, 2021. It says, if energy stocks are heavily shorted, does that spell opportunity? It says short bias towards energy stocks, and I want to show you this. I'm excited here. According to JP Morgan quant guru Marco, can't say his last name, the number of shares currently short U.S. energy stocks is 4 times the S&P 500 average. In a report outlining his bullish outlook for a commodity supercycle, Kolonovic used the chart below to show how this trend has evolved over time. This is the ratio of energy sector to S&P 500 member shorts. Left axis in shares, solid line, right axis in the dash line. And these are the shorts here coming down. The shorts are way up here, way up here on this cycle, which means we have a large opportunity for a big short squeeze in oil. So that's there. The Bloomberg Commodity Spot Index is up over 60% from its March 2020 lows, and commodities are expected to see rising demand as global travel resumes and fixed investment accelerates in the second half of 2021. This is the Google trends for reflation, obviously through the roof. So that's looking good. You do have expectations of a swift recovery later this year, higher inflation expectations, and some signs of actual inflation picking up as well currently. Historically, energy has outperformed during reflationary regimes. Totally agree there. Even though the reflation theme is gathering momentum, most investors are still very underweight energy exposure. Active and passive investors have dramatically cut energy sector allocations since 2010. Retail investors have also cut energy sector exposure from 4.4% to just 0.6%. This is the fund allocation to energy have steady declines in all these recently. Look at 2021, it's way down. It's just starting to come up. Going forward, Mr. How do you say his name? Expects sentiment to improve in the energy sector, possibly starting with retail investors, given the increased retail activity and interest in stocks that are volatile, have high short interest, are similar in size, and have thematic news, social media coverage. The sector will likely be of interest to retail investors. One reason short interest has become a major buzzword for investors stems from well-publicized rally in GameStop shares. They talk about the GameStop short story. Here it is, timing a rotation toward energy. And when I talk about money rotation on the channel, this is what they're talking about. When a sector has underperformed for long as energy has, investors are rightfully weary of trying to catch the falling knife. That said, when a group is heavily shorted and underowned as energy is, there's also a serious mean reversion potential when conditions change. Energy is the only sector that still has a negative momentum profile across many systematic, factor-based investing strategies. In March, that could change. Many equity quants tend to crowd around the 12-month momentum signal. Thus, once we lap the March 2020 lows in equities and oil prices next month, this key momentum indicator will flip from bearish to bullish. This could ignite short covering and buying programs that will result in net inflows to the energy sector of between 20 billion and 30 billion. So it's ready to go, guys. I wanted to share this all with you. Looks like we could potentially have a very big short squeeze coming in oil. We were purchasing on the channel. The reason I was purchasing was because the ratios were cheap. The ratios identify that the money flows have flowed out of oil and that we were buying at bottoms. I was looking at what some of the billionaires were doing, like John Goff, who was purchasing shares nonstop in his company Contango. So I think that oil has an incredible opportunity coming up because we have inflation coming. And it's a very good inflation hedge, and it goes berserk when inflation comes. And if we start using oil in greater and greater quantities, I think the supply side is all jacked up. So if the supply side's jacked up and we try to ramp up our use of oil, I think prices are going to go way higher. And if we've got everyone short on it, this is going to be a huge short squeeze, which could propel this thing to very high levels over time. If you guys like this content, subscribe to the channel, give me a thumbs up, leave comments below on what you guys think on the oil squeeze that could potentially be coming up. I think we could hit somewhere north of 200 a barrel, 5-6 years, maybe 300, 400. I don't know exactly. Depends how much inflation comes into the system. Thanks for watching. This is Finding Value.